Greetings, everyone. Welcome to Liberty Call. Today is Thursday, December 1st, 2022. Can you believe it? It's already December. It's cold enough outside with the, it's actually 52 degrees. It's not too cold today. It was quite chilly the last couple of days when we were getting snow. So most of it is, a lot of it's starting to melt away. I had to go out and clear a bunch yesterday with the pusher. There was only about this much snow. It wasn't worth getting the snowblower out, but anyways, who has the nerve to call me while I'm broadcasting this insightful information? How rude. Anyways, all right. Well, if it's your first time watching, give me a big old thumbs up. I'd appreciate it. Hit the subscribe button so that you can get these important information that I share every day because, I scour the internet looking for news and things to talk about. And anyways, all right. Well, let's go ahead and dive in and take a look and see how the markets did today. Certainly not as good as yesterday. The Dow Jones was down 0.56%, or almost 200 points, closed at 34,395. The S&P 500 just down a little bit at down 0.09, closed at 4076. NASDAQ slightly up at 0.13, closed at 11,482. Small caps were down 0.11%. The VIX fell 3.5% today, finally below 20. It's at 1986 currently at the moment, but again, I see, using my Karnak skills of seeing the future, I imagine that we'll probably have some more volatility coming up here in the next couple of months. Let's see here. Canada up 0.35, Brazil down 1.39, Mexico down 0.32. Let's take a big jump across the pond. In Germany, they were up 0.65. UK was down 0.19. Geez, people, I'm busy. France was up 0.23. The Euro Stoxx was up 0.5. Netherlands was up 1.06. Spain was flat for the day. Italy up 0.31. Switzerland up 0.99. And Portugal up 1.1%. Let's head a little further east. In Russia, the MOEX was up 0.59, while the RTSI was down 0.13. And the overnights in Asia, Japan was up 0.92, Australia up 0.96. In China, the Shanghai was up 0.45, the SESE component up 1.4, same with the China A50 up 1.4, DJ Shanghai up 0.7, the Hang Seng up 0.75, and the Taiwan weighted rounded out today up 0.9. So for most of trading day, December 1st, looked pretty good. The Asian markets were solidly in the green, mostly greens across Europe, other than the UK. And, the two big players here, the S&P 500 and now Dow Jones were in the red here. So, all right. So that's everything as far as the markets. Let's take a breeze through you can see Jake. He must want to get a closer look at all the exciting stuff going on. Let's take a look at today's market recap. Dow wobbles on mixed economic data ahead of jobs report. The Dow slipped Thursday following a Powell-fueled rally a day earlier as investors weighed up mixed economic data underscoring weak manufacturing activity and a still resilient consumer ahead of a key jobs report due on Friday. Manufacturing activity slipped into contraction in November, falling below a reading of 50 for the first time since May of 2020. Treasury yields fell sharply as fears mount that the economy could be set for a deeper recession next year, even as the consumer remains resilient. Again, I don't think we're getting out of this recession, folks. These journalists can try and talk their way through it, but I don't think we're going to get out of it. Excuse me. Personal spending was in line with forecasts in October, underpinned by lower fuel prices, while inflation unexpectedly slipped last month. Financials, meanwhile, were the biggest drag on the broader market, paced by a decline in banking stocks. Hang on a second. All right, had to get that frog out. By banking stocks, as falling Treasury yields tend to weigh on net interest margin, the difference between the interest income generated by banks and the amount of interest paid out to depositors. Symphony Financial, SVB Financial Group, and Bank of America slumped, with the latter down more than 2%. All right, I think looks like my computer stopped. Let me start over again. All right. Synchrony Financial, SVB Financial Group, and Bank of America slumped, with the latter down more than 2%. Tech stocks modestly added to gains from a surge a day earlier, with Apple ending the day above the flat line despite ongoing worry about the impact of lower iPhone production. Piper Sandler cut its forecast on fourth quarter iPhone sales to 74 million units, down from a previous estimate of 83 million amid supply chain woes in China. Let's see here. Netflix, however, continued to rack up gains, rising about 4%. Elsewhere in tech, Salesforce plunged 8% after unexpectedly announcing the departure of co-chief executive Brett Taylor. I don't know how Salesforce makes any money. Their product is garbage. I've used it a few times, and that database is just trash. On the earnings front, Costco wholesale fell more than 6% after reporting weaker than expected sales for November, raising worries about consumer spending in the run-up to the key holiday quarter. Dollar General Corporation, meanwhile, cut its outlook on profit after reporting quarterly earnings that fell short of Wall Street estimates, sending its shares almost 8% lower. Economic data will likely continue to garner the bulk of attention, as monthly jobs data is expected to show the economy produced less jobs in November than the prior month. Quote, non-farm payroll employment growth is likely to slow to 180,000 in November from 261,000 in October, as evidence continues to build that increasing uncertainty is affecting hiring activity, end quote, Nomura said in a note. So yeah, it's, just looking at the tea leaves out there, I would say things are probably not going to be as outstanding as we would like, but, it is what it is. Again, if we didn't want these problems, we probably shouldn't have printed, $5 or $6 trillion in the summer of 2020 for the pandemic. And I put that in quotes because it wasn't really much of a pandemic in the grand scheme of things. All right, now up next, something that I've been paying a lot of attention to is oil prices. Oil rises as China eases COVID curbs, dollar weakens. Oil prices rose about $1 per barrel on Thursday after top crude importer China eased COVID curbs in two major cities, while the U.S. dollar slumped on the view that the Federal Reserve might slow down on interest rate hikes. The shift in China's zero-COVID strategy raised optimism about a recovery in oil demand. The cities of Guangzhou and Chongqing announced an easing of COVID curbs on Wednesday. Yeah, probably because the people were going nuts and we're going to beat the crap out of the people who work for the government. Brent crude was up about 90 cents or 1% at $87.87 a barrel by 1:05 p.m. Eastern Time. U.S. WTI crude futures added $1.50 or 1.9% to $82.05 a barrel. So, if you've been paying attention to the price of oil, it has come down a bit, from the 90s. WTI had gotten down as low as around $80 or in the high 70s. But again, with everything going on right now and the lack of production from our friends, the Saudis, I'd imagine that the prices aren't going to drop much further. If anything, with the energy demand that we're going to see over the wintertime, I imagine they'll probably go back up. Quote, oil markets are going to continue to be buffeted by ongoing news out of China, given how much of an impact ongoing lockdowns are having on oil demand in the world's second largest consumer, end quote, Matt Smith, lead oil analyst at Kepler. The dollar index slumped to its lowest since August after the U.S. Federal Reserve Chair Jerome Powell said rate hikes could slow this month. A weaker dollar means a weaker dollar makes oil cheaper for other currency holders, which helps us out in the long run too. Crude prices were also supported by hopes of another potential output cut from OPEC and allies, a group known as OPEC Plus, which meets on December 4th. On Wednesday, sources called a policy change unlikely, but some feel a further cut cannot be ruled out. Quote, I believe OPEC Plus meeting forces shorts to cover, but the consensus is unchanged. Quota levels, said Tomas Varger of oil broker PVM. Both oil benchmarks are on target for their first weekly gains after 3 consecutive weeks of decline. Brent touched $80.61 on Monday, lowest since January 4th. The prospect of a lower price cap on Russian oil is also lending support, analysts said. European Union governments tentatively agreed on Thursday on a $60 cap on Russian seaborne oil, an EU diplomat said. I thought the EU was boycotting Russian oil. I guess when it gets cold, they change their mind. Quote, after dipping into the mid-70s at the start of the week, oil is now shifting focus to the OPEC meeting on Sunday, Russian sanctions, and the absence of large SPR barrels hitting commercial inventories. All three of these are price supportive, end quote, Smith said. So yeah, also we're not dumping, what was it, 1 million barrels a day out into the open market from the petroleum reserve. That's going to help push prices back up also. All right. Last up here has to do with consumer spending and manufacturing. U.S. consumer spending powers ahead in October, inflation cooling. U.S. consumer spending increased solidly in October while inflation moderated, giving the economy a powerful boost at the start of the fourth quarter as it faces rising headwinds from the Federal Reserve's aggressive monetary policy tightening. Ooh, they like to put in those big adjectives. The labor market, the economy's other pillar of support, it continues to show resilience. The number of Americans filing new claims for unemployment benefits declined last week, almost unwinding the prior week's jump, which had lifted claims to a 3-month high. Other data showed on Thursday. The outlook was, however, darkened by news that manufacturing activity contracted in November for the first time in 2.5 years. With factories reporting weakening demand, still economists remain cautiously optimistic that an anticipated recession next year would be short and mild. Okay, let me stop there. When have these retards, and I'm going to use that word, retards been right about anything over the last 2.5 years? From the mortality rates of a certain cold that was going around to how well a certain therapeutic was going to work. Completely wrong. And as far as, well, will all of this dollar creation create inflation? Nah, it's transitory. It's no big deal. Again, these people are full of crap. They're just trying to say this to make everyone feel better. It's going to get a lot worse, in my opinion. So, quote, the consumer is alive and well, end quote, said Christopher Rupke, chief economist at Forward Bonds. Quote, right now, even as consumers do not buy anything more in November and December, real consumer spending is running well above normal and in no way, shape, or form looks like a recession. Yeah, people are spending more money, but they're getting less for it. So, that's kind of been my take most of the year looking at the consumer spending data and everything that's going on. It's, your box of Cheerios is smaller, but you're paying more for it. Consumer spending, which accounts for more than 2/3 of U.S. economic activity, jumped 0.8% after an unrevised 0.6 increase in September, the Commerce Department said. October's gain was in line with economists' expectations. Inflation-adjusted consumer spending rose 0.5%, the most since January. Economic growth estimates for the fourth quarter are as high as a 2.8% annualized rate. The economy grew at a 2.9% pace in the third quarter. Spending on goods increased 1.4%, driven by prices of motor vehicles, furniture, and recreational goods. Outlays on services gained 0.5%, lifted by spending at restaurants and bars, as well as on housing and utilities. Strong wage gains, one-time tax refunds in California, which saw some households receiving as much as $1,050 in stimulus checks, and cost of living adjustments for food stamp recipients fueled spending. Again, those are government handouts. I don't see how they really help the overall economy, because you stole that money to give it to the parasites in the first place. Personal income rose 0.7%, the most in a year. Income at the disposal of households after accounting for inflation increased 0.4%, but consumers also tapped into their savings to fund their purchases. The savings rate dropped to 2.3%, the lowest since July of 2005, from 2.4% in September. Dwindling savings raised doubts on the sustainability of the current pace of spending. Quote, each month that the consumers forfeit savings for the future in order to sustain the rate of spending that exceeds their income, the more it dents into their ability to weather the coming storm, end quote, said Tom Quinlan, senior economist at Wells Fargo. Other economists, however, argued that the savings rate was merely normalizing. Quote, only a portion of the excess savings accumulated in the first year of the pandemic has been spent, end quote, said Scott Hoyt, senior economist at Moody's Analytics. Quote, credit is also available for many despite becoming more expensive, end quote. Yeah, because going into hock makes more sense to continue to buy things you can't afford. All right, a little further down, stocks on Wall Street surrendered early gains after the ISM reported that the manufacturing PMI fell to 49 last month. That was the first contraction and also the weakest reading since May of 2020, when the economy was reeling from the initial wave of the super flu, and followed a 50.2 in October. A reading of 50, a reading below 50 indicates contraction in manufacturing, which accounts for 11.3% of the U.S. economy. According to the ISM, the index would need to fall below 48.7 to signal a recession in the broader economy. So let's keep an eye on that over the next couple of months. Softening demand was the dominant theme among manufacturers, with most blaming, quote, uncertain economic conditions that lie ahead. Despite the uncertainty, the labor market remains tight. A third report from the Labor Department showed initial claims for state unemployment benefits dropped 16,000 to a seasonally adjusted 225,000 for the week ending November 26th. Claims had jumped to 241,000 in the week prior, while some my dog's scratching over there. Ignore the little jingle from his collar. While some of the rise likely reflected a surge in layoffs in the tech sector, claims also tend to be volatile at the start of the holiday season as companies temporarily close or slow hiring. All right, so jobs numbers look okay still. Manufacturing slowing down. Again, with everything else going on in the world, I think we're in for a tough year heading into 2023. So now is the time to get your crap together. So this is where I always welcome you. Hey, if you need some help getting your finances back on track, go to dsafinancialgroup.com, book a meeting, and I can help you with all of those needs. Whether or not it's just getting your budget back on track, saving for retirement, saving up for, I don't know why people would send their kids to college at this point. It's just basically wokeism on steroids. But hey, people still do it. Anyways, all right, well, that's everything I had for today. Like I said, if anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information's there. And I'll see you guys next time. Y'all have a good night. Bye-bye.